Hey everyone, E-Man here, and welcome to our webinar, Digging into Remora Lite and Profiting from the Dark Pools. So the goal for this session, I'll try and keep it as concise as possible. Those of you that know me, I need to quiet down at some point. So we're going to cover briefly why the dark pool trades matter, examples of large trades, dark pool trades across the market, which is important. Getting started with dark pool prints, and I've got a poll after this slide that I want to get the feel for the participants in the room. Finding bullish and bearish trade setups, whatever your flavor. Historical prints. Creating instant interactive watch lists. So we're going to start learning where we can track these and keep an eye on things that we're interested in trading. We're going to plan day trades, and we're going to plan swing trades, and we're going to learn how to research prints. So I want to do a quick poll to get the feel for the room here. So this is, I've joined the webinar because... and we have 3 possible responses. So let's see who responds. Okay, so we got about 50% so far. Okay, I'll give it 10 more seconds. We've got about 75% of people have responded, which is great. So we'll do 5, 4, 3, 2, 1. All right. So I've joined the webinar. Let's see. I'm a Remora subscriber, and I want to learn more about the software. So that's 35%. I'm not a subscriber. I want to learn more about the dark pools and how they can help my trading is almost 60%. And 6 are hanging out. So thanks for the support, you 6%. So that's good to know, because when I've designed this webinar, I wanted to cover a few of the basics as well with that sort of thing. So these are the general topics we're going to cover. We're going to investigate the dark pool prints as well, and we're going to see how this can help us be better traders, right, in making decisions. So let's move on here. Why does the dark pool matter? Why do dark pool trades matter? Now, this is really important because dark pools aren't illegal, but they do favor institutional money, right? Institutional investors make large trades, and legally they can do it without exposure, while finding buyers and sellers, preventing heavy price devaluation. And what that means is, say, for example, you're an institution and you want to sell 500,000 shares of something. Well, if you just put, sell at the market, you would wipe out the order book. And by the time your order got filled, you would have lost a lot of money. So what they wind up doing is it's like an iceberg order, kind of, where they'll get it over a specific period of time at the price that they want. And then they're like, aha, surprise, like somebody hiding in the closet, right? I just sold 500,000 shares. And to us as the retail trader and investor, a lot of us, we're not watching our time and sales every tick of the day for every transaction. But what you'll wind up seeing on the time and sales, had you caught these things, is that you'll see the price going by 100, 200, 500 shares, whatever, then 500,000 shares at a specific price. And you're like, whoa, I didn't see that on the time and sales, or sorry, on the ECN or level 2. It's like, no, you didn't. And so they started doing that in the 80s. And the rationale with the institutions is they wanted the favorable rate and everything because they were making the big orders, so they get the bulk discounts and they get the the VIP treatment for that sort of thing. Now, these trades aren't reported until the entire order is filled. when you're looking at a stock and watching it during the day, and I've done this, I've seen it so many times, something's just hovering there, not doing too much at a specific price for like half an hour, 45 minutes, usually around lunchtime. And then all of a sudden you see there's a print because we're watching a block trade indicator. And it's around the exact same time that you did that, right? So they bring it up, they bring it down in order to get the price that they want, right? So in some of those, you wind up seeing that, and it can be a little bit frustrating, especially if you don't know that this is actually happening. And so here's an example. On, was it Thursday? Yeah, silver, 11.8 million shares on July 26th. And we can see this down here, this little box. This is a screenshot from Remora where we got this. But so from 1716 to 1731, there was 11.8 million shares, right? And you see here this little doji, the thinnest candle in the entire chart, is this massive, massive institutional order for almost 12 million shares, right? And if we look at silver, the entire chart, like it's been going down for quite some time. And then at the bottom here, we see some consolidation, and then look at the volume here on this little doji, right? So we're bullish above and bearish below, and this doesn't seem to have splashed. It still can, but what happened the next day is we came down, we broke that print and took off, and look at the volume the next day. So I wound up swinging this on that day because of this candle. And I bought a call spread out. I went out too far. I went out to September. So I took 30% of it the next day, which I didn't. And I just got into another trade. But look what silver did after that. Now, if you don't know about dark pool prints, then you'd be like, well, you're kind of guessing, or you're reading the news. You know, commodities, things like oil and gold and everything are always manipulated, and they have a political sort of tie to them. So what gets rid of a lot of that noise is following the institution. I don't have to read an earnings report, because how many of you have read an earnings report? Oh yeah, that's bullish, but it goes down. Or it's an abysmal earnings report, but it goes up. When somebody makes a trade like this, I don't need to do any research, because this is a level of commitment that is unequaled by any other retail investor or trader. You know, and that's what I want to see. You know how many hours I save by not having to read earnings reports? Because we have the dark pool. This is the level of commitment. So there are hundreds of trades that we track. We get about we track about 500 different block trades every day, right? And we can see this. We actually have about 500,000 of them that are available, you know, at the press of a button. And that's what we're going to get to. We need to be able to find out, you know, what you would use the software for is finding trades that you're interested in. If you like trading silver or oil or tech or anything like that, we'll give you the foundation for that. And Remora is actually a tool to do that. And so that's why we're here, is to see more of this sort of stuff and see how we can bring that to help us. And I've actually given you some homework at the end. So we see hundreds of these trades every day. And Remora tracks these trades back 3 years. So, you know, as far as back testing and, you know, you want to see what made this move or that move, we can do that. And we're going to look at that as well. So we have instant single-click summaries and data mining tools that help you quickly skim through thousands of trades to find the best setups. So Remora saves us hours of work each day. So what we're going to look at here is, I've got my Remora here. Now, the one thing about this, it's a Microsoft Excel application. And the requirement for that, and I'm sorry to say for the Mac users, Microsoft, although it does support Excel on a Macintosh, it doesn't support most of the coding that's available to Windows users. So it requires a Windows machine. If you have a Macintosh, there is something that you can do. There's a virtual machine called Parallels where you could just run an instance of Windows as well and then use it. So Remora will eventually, future planning, be available on the web. But currently, right now, it's a culmination of about 4 years of effort of everybody in Stephanie's Java pit, developing this and making it better. So about the Remora here, when you get it and you open it, it needs to stay up to date with the recent prints and things like that. So you have this update tab, the very first tab that's in the workbook. And we have a whole bunch of things on the right-hand side. There's a whole bunch of videos and how-to and things like that. And also the getting started documentation. There's some configuration for Excel before you even open it there. But you would get an email with all of those instructions. There's a few clicks that you have to make before you run it for the first time. And there are 6 buttons here on the left. The dark pool data is available every morning. And so we choose the update data button. And what happens is it reaches out to the server and gets all of the updated data and late prints and all of that sort of stuff. And so everything is current and fresh. At the end of the trading day, you can click the second button that says update block print data. So after the market closes, about 5 or 10 minutes after that, you can click this button and it will bring in all of the recent block prints for the current trading day. And that allows you to get a jump start on your homework and see and start planning trades for the next day. And also you can see if there's something that you've missed, because when you're trading and you're watching a block trade indicator, there are thousands of prints coming in all of the time. And we miss some, but Remora catches them all in that case. And then you can see, and especially if you're watching specific stocks, right? And then you see it's like, oh, well, X had a print today. Well, I'm in the trade. I want to know about that sort of thing. So by keeping Remora current, that's really helpful there. And should you go on vacation, 2 weeks, 3 weeks, whatever, it'll always be current when you come back. On the left-hand side, we've got some keyboard shortcuts, so you don't have to take any notes. You'll have this recording, but all the features in here are documented as well. There's the videos, and also the RemoraLite.com website has all of the videos and how-to and everything there as well. So we're going to use this as a tool. So what we have is we have trading objectives, and then we're going to look at it from the aspect of what do I need to know to trade, and how can I get that information really, really quickly. So where I want to start with is the dark pool tabs here, because the 4 major indices, the SPY, the Qs for the NASDAQ, the Russell 2000, and the diamonds, those are the whatever the word is, they're the market leaders, probably a bad word, but if the SPY is going up, then the general market is going up. Most of the stocks that you wind up trading follow one of these indices, right? So if you're trading a tech stock, it would behoove you to know where the NASDAQ is, right? So when we look at these dark pool tabs here, this is a summary of all the dark pool prints on the SPY since February of 2018 to current. Now, these ones are separate from all of the block trades. Like, they do come across as in the block trade indicator, but there's something special about these prices, because these are prices that have come across the time and sales, but we never traded there that day. So what this means is on the 28th of July, so Friday, we had this level of 401, Thursday, we had this level of 401.25, right? But there were 4 million shares, but we never traded there. that day. And what makes these trades special is there is a certain loophole in the market where institutions can report it up to 24 hours late. And these are the ones that are more important in a way for determining necessarily direction. We get real-time prints during the day, like a 400,000 or an even million, or, but these have the different signature sizes. So for example, the SPY might start with 252,000, and it's never an even number on that. So it's not 252,000. It might be like 252,139 or something like that. And rather than just a straight up trade ending in 000, something like that. So these are very important. And we can see here from the chart, this goes back 30 trading days. And we can see here that the yellow bars are volume. The green line is the actual close for the day. And a green dot here means that there was a print there and we closed above it, which means that on that day, this is a bullish trade. That doesn't mean that the overall sentiment of the market or the overall direction of the SPY is bullish. But what it means is on this day, the close of the SPY was above the price of this Levi. That's what we call them, is Levi's here. And so we can see also the volume here. So there was 4 million on Thursday. Now, when we look at this as well, the close was 406.07, and the price that these 4 million shares were at was at 401.25. So this is green because the price, the level here was below the close. So that's technically bullish there. So when we look at this chart over the last 30 days, we can see the institutional trades here. And anybody that doesn't realize that the market is manipulated, all you have to do is look at this, right? If you go back and you look, anything over 10 million is highlighted in green here. So this was a big level for us when we broke 390 last week. See, that was a 22 million share size. And I don't know what that is in dollars, but it's more than $1 billion. So the importance of these sorts of trades are lines in the sand. Those are the institutional commitments. So I mentioned before that we're not sure if they're bullish or bearish until they actually make a move. So there is a chance for a splash with those sorts of things, but we have to be aware of where they are. Because, for example, when we close above 390 here, we actually, when we broke 390, what was it, last week, then we came all the way up over 400. What did we close at? 411, right? So as long as we're above these prints going forward here, then we're bullish on the SPY. And I realize that we're in a bear market, and bear markets trade very differently than regular bull markets, because a bear market can have wicked rallies. And like we've seen, we've gone up, 25 points in a week. And so whatever comes of that, but we don't normally, people who trade the dark pool usually don't read the news. We only read the news if you want to be upset about something, right? I don't read the news. I have no idea what's going on, but yet I'm a profitable trader because I'm just looking at this sort of thing. So the other thing that the Qs here are the similar thing. Now the Qs seem to be heavier this time comparatively. The dark pool sentiment on the SPY is always heavier. It's very rare where we get nothing. But the Qs, anything over 3 million is highlighted here because that's usually a big level. But there's been lots and lots of dark pool interest here at these different levels. So let's see, we have some questions. Okay, so Robert, yeah, trying to wrap my head around dark pool prints. Right. So when we're showing these sorts of things, if you're familiar with like support and resistance lines or trend lines or pivots, moving averages, things like that, then those are essentially support and resistance lines as well, because that is where there's actually these large trades. And if you think of it, it might have taken them a while to get in, meaning that it's going to take them a while to get out as well with that. And so it might have taken a few days to get in, but whenever they're done, they have to report it. And so we draw a line on our chart, and I've got an example to show you. I've done a couple of them. I did silver and I did Bank of America to watch these. And Randall, you have a blank screen. What you can do is you can click the refresh button. It's the top right hand. It looks like two arrows chasing each other. It's a circle right beside the volume. You can go ahead and click that, and it should come back for you. Okay, so here's the sentiment on the Qs as well. And you can see that there's been more green dots than red dots. And so it looks like they're buying here. Well, clearly the Qs have gone up. It's been quite the rally. And so these are divided out. The IWM as well. And anything over 2 million is highlighted on the IWM because those are considered quite large. And then we have the diamonds. The diamonds don't get many. Like if you see anything over 1 million is highlighted. They might, if they get any at all, usually it might be 125,000 or, well, really that's kind of the smallest there that they'll get. But notice the dates, right? July 27th and then July 12th. So there was nothing for 2 weeks in there on the diamonds. So we can see that here. Okay, so thanks, Tim, for helping Randall there. So let's look at this way. And why I'm covering these tabs first is because getting the sentiment of the market is very important, especially when you're trading. So here we have the Levi prints on indices. Now we call them Levi's. These are the ones comparing those late prints, those special ones that are reported 24 hours late. Now it's important to compare these side by side, and something that I'm not sure Stephanie's called out every correction in the last 15 years because of watching these dark pool prints. And seeing them side by side is important as well, because when you get this heavy sort of volume here on the SPY, the Qs, the IWM, and the diamonds across the board, then there's a massive move. The SPY seems to be lighter recently, but it sure has moved quite a bit. So we can see those here. Now, this adds more data. This late prints is a summary of these other tabs with more data, right? So where we're at in this thing with the webinar is the first thing that we're doing as traders is we're doing the market sentiment. And when I open this is the first tab that I go to. I want to see where is the market trading, because if I trade anything else, I want to know what the respective ETF that it's against, that it follows. I want to know where it is in its life cycle of its prints. So, oh, Daniel, good question. How long should I consider a print valid? And the snotty answer you might think is until it no longer works or until it doesn't. But that's actually the truth. So when you'll know it works when the price level comes down to the print from either side. It'll come up from the bottom or come down to it. If it resists or is support there, then it's still valid. Now, we've seen some old prints, for example, when we had that big correction a few weeks ago when we dropped the 25 points, the 370 level on the SPY still held. And there were, I think it was 30 something million around there back from 2020. And also 2021, because they were trading there in 2020 and in 2021 and here. So the 370 level was huge. And the older the print, I don't really take the super old ones off my chart unless the price action cuts through it like butter, right? Then you know you can take it off. It's done, it's used, you can throw that away. And Ralph, is there a website to tell us what stocks are in each of these indices? Yes, I can show you that. Remora will tell you where they are. Yeah, I usually use something called etfchannel.com. So you can, but Remora will tell you, if you ask it nicely, it'll tell you what all of the components are. Well, it'll tell you what the top components are. So like if you wanted like whatever it is, Apple and the NASDAQ, like, so it'll tell you if you put in Apple, it'll say it's 5 or 6% of the NASDAQ, or Amazon is 9% of XLY, something like that. Okay, so we're getting a little bit off track. I'll just repeat Tim's question. He says, I'm unclear on so Tim's question is, one thing I'm unclear on is Steph's weekly whispers when to get out. Last week could have got into SPY at 390 and rode all the way. Normally, how do you know when to get out? If it went to 403.57, say, and then it started to retrace, how far down do you give them back money before you get out? What are those rules? Okay, so Tim, everybody should have their own trading plan. So I'm not making an excuse here, but I'll give you an example. Steph says bullish above 390. Okay, so when you look at the chart and when Steph made that decision to announce bullish above 390, then that was for the day trade. I would think, if that's what you're referring to, like on the if it was the weekly whisperers that are insights, because the insights are for swing trades. So she would say, okay, technically she shows you the trend lines and everything. And if you watch her insights, she'll say, if SPY breaks above 390, then game on, right? And here's her reasoning. Look, it's funny that you asked that just now. June 13th, 389.95, 22 million, right? So Steph said, if we break above 390, then we have a trade up. And what she's doing is she's looking at, because it's a swing, major price levels and moving averages and trend lines. So she could say 390, 392.50, 395, whatever. And I think on her insights, she went up to 400 or something that week. And but the thing is stocks don't just go up, right? They get to a point, because when you think of trading, everybody has a trading plan. So if you were to buy it at 390, well, somebody else is going to say, I'm selling my part at 391.25. I'm selling mine. So what you'll notice is stocks take the staircase up and the elevator down. So when you hit things like moving averages and things like that, those are algorithms taking profit. So you're always going to have retracements. But what you have to keep in mind, are you above the recent prints? Because those are a line in the sand, right? If she said bullish above 390, and then we went up to 392 and then closed below 390 again, I would be suspect of that, and I might be considering a short position based on the chart setup, right? So when those are suggestions, bullish above 390, and then you have a trading plan for that with a profit. And I'll tell you, it's happened to me a lot of times. I did that the other day. I caught the beginning of a SPY move, and it hit my first target, and I got out the whole thing because it was really whippy and volatile. And I was a little bit ticked at myself, because it was my trading plan. But when I reviewed my trade, it's like, look, we're above all of these prints. It was the perfect setup. And my next target, had I held on to it, instead of making $100, it would have been $500, right? So it's not that I'm angry at myself for that with the trade. It's that it's sticking to your trading plan. And it's either once it goes, if it doesn't hit your target, you either let it stop you out, right? Because that was my trade. So hopefully that helps, Tim, because it needs to be your trading plan. Okay. Oh yeah. So with the insights, yeah. So she sends that out every week, and she's giving you levels for the week, and then the next insights, she recaps the previous week. Sometimes they'll go up and hit one target and come back, maybe not that strong, but you still watch it. And I'll show you something later on, because when I'm trading here, like the stocks that I trade, when I pick a stock to trade, I watch it for months until I've beaten it to death. Right? I was in plug for like 3 weeks, right? Because those sorts of things. I've been watching X for about a month. I've been trading the SPY every day and waiting for these things to move, right? And once you find one, here's the thing. You see, SPY might be a bit of an anomaly. It's always got prints. But when you see something, for example, Uber, right? The last webinar I did, whenever that was, 6 weeks ago, 5 weeks ago, I did a presentation on Uber because there's 26 million shares there. It hasn't moved yet. And how I know that it hasn't moved, because we could argue, well, it went from 18 to 22. Yeah, well, the prints were between 20 and 21. And for a stock to move only $1 on a 26 million share trade, that's not happening. So it's probably going to do something ridiculous for earnings. And so I'm just keeping an eye on it, right? I bought some calls when I broke around 24 out, but I think they're going to expire worthless. I might be right, but too early, not going out far enough in that. But I thought it was bullish. But then, you get the prints and then there's negative news and it still goes up. So it's still that sort of thing with that. So what we're going to do is we're going to find some great trade setups here. And Steph does use these tools to create her insights. And we're going to see how that's actually done. So what we want to do here, so we've looked at the general health of the market, right? So we see where the prints are on the SPYs, the Qs, the IWM, whatever you're trading, and whatever you're trading as well is important that if you're trading something that's a component of the SPY, that you know where the SPY is at. If the SPY is going down, many stocks are going down, right? In sympathy to that. So I always keep an eye on the index that it's associated with. If you're trading banks, watch XLF, things like that. So let's move on, and we will look at a watch list. So we were talking about a watch list at the beginning. So when we go back, anything you're going to create here, we're going to do it from the main tab. So I'm going to do add a watch list, and this one's just going to be our, we'll just call it swings. Now it says, do you want to make it the default for print lookups? We'll choose yes, and I'll show you that because you can have as many watch lists as you like for different reasons. Say, for example, you wanted one for day trades or you wanted one for swings. You can have as many as you like. So here's the blank watch list. Now, if we put a ticker in here, Amazon, for example, well, what it does is it gets the current price and the net change for the day, and it puts us in this bullish above. So when you see Steph calling out all of her trades, like from the insights, or even if you watch her Whisper of the Day video, she's going bullish above a specific price with targets, bearish below. Now, the reason for that is being completely unbiased. You know, you may spend, you know, $1 million a year at Amazon and be bullish on Amazon. They can, you know, the stock can still go down. So without having a bias here, we want to be able to pivot and say, okay, if it breaks above a specific price, then we have some targets. If it breaks below a specific price, we have targets. And you're a robot. You're trading against robots, and it's very tough as humans to not have those emotions, right? And that happens to me sometimes. I've sat there, you know, early on in my trading career. It's like I was trading MU, and it's the first one that ever did that to me. It shot up, and it shot up like $2, right? Well, it was probably exaggerating, but it shot up huge at the open, and I bought calls, and I watched it retrace all the way back down to the bottom of the candle, and I got stopped out for like $200. I'm like, what on earth just happened, right? And we've all been there at some point in our trading career, but you know, you see those sorts of things, and we're all human. So in this, if we were trading Amazon here, and it was 134.88, we could say, for example, now these are our trading plans for each stock. If we break above 135, we could do this 137.50, 140, right? This would be our plan. Like, I haven't looked at a chart, but even if it was a swing, we could say we're bullish above 135, a major dollar level. Or we could say then if Amazon comes back and breaks below, say, for example, 130, we would have our targets there, right? And then there are options here to add dark pool prints. So what we could do is we could look at our settings tab here. And what this tells us, let's not worry about this left column. This is just how it looks. Like if you want the font size or column titles, we don't worry about that. Bold tickers, usually the whatever it's set to is fine. But we can adjust the number of columns, right? The bullish above targets, the bearish below targets, and the number of dark pool targets. We could put that up to 15. Now, this is the important part when we do this with the watch lists. How many days back, trading days back, do you want it to populate prints in here? Well, I'm going to go 2 weeks, and I want prints over 400,000 for Amazon. And that's not bad for Amazon since they split, right? They went 20 to 1, I think, was it? Anyway, I think it was 20 to 1 they went. And we have this option, add to the dark pool tabs. So add it here, and then overwrite if it's not empty. So this here is if you were putting in your own numbers here, and you had this ticked, it would erase them. So that would be unfriendly if you didn't want that to happen. So what I'll do is I'll choose OK. And I can just choose recent prints, right? Oh, hang on for a second. Let me check something here. We'll put in another ticker. And that wasn't supposed to happen and out of memory. I'll just be 1 second with that. Okay, so we'll look at, let me come back to that in a minute. What I'll do is we were going to populate a bunch of things here, and we can do that with the recent prints. So this watch list here, you can do whatever you like with it. You can give it column titles here. If I put something here, like for example, ETFs, then I can sort it here and add more things like that. Now, the other thing that we can do is let's find some trades. Like, we don't know what we're trading yet, right? I just put Amazon and Bank of America. But as far as looking at prints, well, where do we get them from? Let's look at the recent prints tab. Now here, this is what Steph uses every week as well to find her trades. And there are about just over 300 that we track. I think it's close to 300 that we actually track. for dark pool prints. So there are a couple servers out there that are scanning 300 time and sales windows for specific share sizes on a whole bunch of tickers. And so this table here, we have the ticker, their earnings date, and then whether they're reporting before the market open or after the market close. And then we've got the volume, the current price, and the net change for the day. Now, this lets us, it's interactive, so we could actually run a scan that says, hey, I want to know a summary of all the prints for 300 tickers, whether they meet my criteria for trading or not. Okay, so we'll look at that in a second. We can see the short interest, the short ratio, days to cover. The higher this number, the more short interest there is. Some of you that are short traders prefer that. If there's a dividend, when the ex-dividend date is, and then the amount. So if we go ahead here and we look at, it says hit Control Y or Control Shift Y for filter options. I'm going to go here, and this lets us, similar to the watch list, it says, well, we're looking for prints over 400,000 for the last 2 weeks, right? And then we can just choose update, which I will do here. Now this will take maybe less than a minute, I would think, and it'll flicker at you a little bit. It's the way it's populating all of the data. So we'll see if there's any questions in the meantime. Oh, so Robert's question is that average volume, is that average dark pool volume? No, that's average volume, daily volume on the actual stock itself. So, because when we select stocks to trade, that's one of Steph's rules. They need to trade more than 1 million shares a day. Otherwise, it's not really worth it, right? When you don't have a lot of volume in a stock, they're not great to trade because you would have higher bid and ask spreads. They're very thin, and you wind up losing a lot to slippage. If you sort a particular column, can you easily get the chart back to its default setting? Ralph, is that on the dark pool tabs that you're asking? If it is, yeah, you just set it back to the original, just sort it by the date. Well, you asked about a chart, so there's only the dark pool tabs that have charts, and then the ticker chart, which I'll show you later. Yeah. So if you've sorted it and the chart doesn't look right, just sort it by date again, and it'll be okay. Oh yeah, this page gets sorted. Yeah, there's no problem with it. We're going to look at that as well. So this finished in 50 seconds. So what we have here is, it says at the bottom, there are 113 out of 386 tickers that meet our criteria, and our criteria was prints over 400,000 in the last 10 trading days. Okay, so what we can see here, for example, is Alcoa its price is $50, $50.80. It's $1.81 up on the day. So that's a big move for a $50 stock to close positive $1.81. But the last print that met our criteria in the last 2 weeks was this 435,000 print on July 19th at 44.47. So we're already $6 ahead of that. And if you're interested, then we can go and find out more about that. So Carlos has a question about price up or down, or compared with what date. Look at BABA. Right, so I'm getting to that part now. If we look at BABA, the Price of BABA is 88.68. Now look at the prints in the last 2 weeks. We had prints at 93.65 for 700,000, and we had 417,000 at 91.14. This price is below the prints. That's what the arrow is for. It's relative to where the price is related to the dark pool prints that meet your criteria. We're also down on the day by $11. Okay, so I'm going to choose clear all filters, and I'll show you something here. Out of all of the stocks that are there, this Agilent Technologies here, it says no prints above 400,000, which means there were prints at some point, but none of them met its criteria. Okay, so this one here, this ABC, no recent prints in date range, meaning that in the last 10 trading days, there weren't any prints at all. So what we're interested in here is if I go show prints only, then that brings us back to our selection. But if we're looking for longs or shorts in this, so Mark says, oh, you're talking to Ralph. Okay, thanks. So here, what we're going to do is if we're looking for swings, for example, if something is stuck in between prints, then that's something you might not want to swing for the day, right? If you were looking at something, oh, I need something quick to swing. Me personally, I want to do my homework and go back and see where we are compared to other prints. But what you could do here is we could exclude the betweens, okay, by unticking this box. And this gets us down to 92. So now we have some that are green and up on the day. These are all of the, oh, that's above and below. And then so, okay, let's just look for longs. Well, I'm going to untick below. And then, so now we have just the above. So now there's 63 possible longs where we're above all of the prints in the last 2 weeks. So now you can start looking at your charts. If you were interested in Alcoa, you might want to do that. Now, AAL, American Airlines, it's above the prints, but it's down on the day. It's slightly negative, so buy a nickel. That might not matter, but what you would do is you would look at the chart setup, and you can also investigate more prints into AAL outside of this time frame. And that's something we're going to look at in a little bit. They have a higher short interest as well. So this, if you were looking for something to add, for example, to your watch list, then we can do that here. So if we were interested in adding these to our watch list, remember when we created that, it said, do you want to make it the default? Well, if I wanted these ones, like BAC, Amazon, and let's see, what is that, CCJ, I can do this, Control-Shift-W, and look, it added it to my watch list automatically here. So I could just change this to longs, and then we have that like that. So we'll go back to our recent prints. So this saves you the work of actually having to type it. But let's, we can switch this back and we'll look for shorts. And we can see ones that we want, ones that are down on the day, or the below prints and down on the day. So I would possibly exclude CVS, Dash, some of those. But then you can see, like, so if you're like, well, I don't trade $100 stocks, I only trade $50 stocks. Well, you have something to look at now, and you have the whole print summary here to see if it's something that you like. So all you would do is just take the ticker and load it into whatever your preferred platform is for that. And the other thing that we can do here, I'm going to clear these filters. And so if here's earnings filters. Some of you might like trading earnings. So if I clicked, for example, last week, these were all of the tickers that had earnings last week. And if you wanted to trade any of them or find something that we knew that American Airlines was on the 20th before the market opened, well, on the 19th, you might have placed some sort of trade against it if that's what you wanted to do. So this week, these are all of the ones that reported this week down here, and it showed that there were 46 of them. So you could have taken any of those into earnings. And then this is, tomorrow, next week, last month. So just so that you're aware, the week goes from Sunday to Saturday. So if you're on a Sunday, for example, if this was tomorrow we were doing the webinar, we would have to choose last week. So I want to show you something else with using this. I'm going to choose, I'm just going to go back to above. Now this ticker filter profiles, if I choose add here, I'm going to call this potential longs 730, what is it, August 1st, right? And now if I grab all of these, you can do use the control and shift arrow or something. I'm going to copy these. I'm just going to paste it in here and hit enter. And there they are, right? So it puts them in the format that you need. You could even take it from your trading platform and it'll put it this way. If you're going to manually type them, you have to put a comma in between each of them. But since I've labeled this, okay, and if I choose clear filters and then I select mine from the list here and choose filter, then that's everything that I selected. And I can see where those are in respect to everything else. So you can have as many as you like here. And then what happens if I had 2 or 3 or 4, there's this all profiles that is a summary of all of the sub profiles altogether. So if you just wanted to see everything that you were watching, you could go to all profiles, and this would just be one big list of all the tickers that you're watching. So that's helpful too. So if you, for example, wanted like crypto only, or you were watching the bank sector or something like that, you could put that in here and leave that. The other thing too, this override update. So if I was to tick this, the override update, if I was to tick this and choose run, it'll skip the other 300 and something and just do your own. I mean, it takes 50 seconds to do them all, but it gives you that option to do that. Okay, so let's go ahead and we've added some tickers to the watch list. Okay, so recent prints, insights. Okay, so let's look at the insights here. So I do this every week, and Steph somehow finds time to give us more tickers every week. And so here's a completed watch list, this insights. And what I've done here is I've broken this up. This is the one from, she only added a couple. She was on vacation. I think she did an educational one last week with, I think, 5 updates, right? So this is the one from the 18th. And so this is where we were at, the SPYs, and I sort them out this way. The ETFs, technology, financials, stocks. So whatever the bulk of her insights are, I break them up into little sectors, right? And so I can choose here, recent, this one, let's see if this worked. Yeah, I've got to handle that. So what the recent prints does, I might have to close this one. I was farting around with it for a bit. 1 second. And just be okay. Okay, so we'll come back here. There's the, I'm going to choose recent prints here. I've done something. Okay. Do one other thing. Out of memory. Try one more. Okay, so here, when you choose recent prints, what it does, oh yeah, David, I'm getting to that. Yeah, David's question, how do you sort within subgroups? So with this, when you click the recent prints, okay, it does a couple things. The first thing that it does is it gets all of the prints in your criteria, and it sticks them in here in your dark pools, right? So this one, and if you hover over it, anything that has a little red triangle in it, if you hover over it, it tells you the total number of trades and the total and the date for that timestamp. So here, also notice that the SPY has a little triangle. So if we hover over that, we also see them in a list. Now, it's important to note that they're sorted by price, highest to lowest, right? Because you're always comparing the price. You want to know where the price is in relation to the prints. So we can see here that the first one, 406.16, was 5.4 million on July 29th, 22 trades, right? And this was Steph's insights that we were talking about earlier, bullish above 390. She went all the way to 407, and we've blown through all of those, that sort of thing. So that's great. So we can look for the ones that are bullish above or bearish below for the week. So Canada was taking a hit there, and we can see now. Notice here, IEFA. This one, see how this one's a different color, right? It's at 56. It's sitting on this price level. So if we break the 56, then, because we're testing Steph's second target on that, we're still below all of these prints that are here. Okay, then we have technology, financials, all of that. So when I put these things together, what we can do is, somebody asked about the sorting, right? So if you wanted to sort by, for example, your targets, we could go down here like this and do sort selection, right? So if you were looking for the cheaper price stocks, well, you would know out of the ETFs, if you didn't want anything over $50, then you can trade these ones all the way down to ARC for that. So what I wind up doing is I highlight these ones. So this is only going to be your selection that it sorts. So if I go down like this, and I do sort selection, then it does it that way. So anything that you highlight there will sort the entire row for you. So I put all of these in. I put the grouping and the stocks, and then I just highlight these ones and just do sort for that. Yeah, and as this is running throughout the day, then it's moving above and below. Like this will just, they'll light up green. If we break below, it retraces, and you can see that live during the day. Okay, let's look at some really neat stuff, because what we've done so far is we looked at the recent prints, and we're like, okay, well, this is stuff that's occurred in the last 2 weeks. So taking a holistic sort of view, I wind up saying to people that I coach, right, I'm like, are we looking at a pebble, a pond, or an ocean? So for example, you see on Apple a 500,000 print. Say this is, well, say it was May 26th, right? All of these dates are different. Say you see a 500,000 print on May 26th. Well, it's 143.93. Well, what is that in relation to anything, right? Is it one print? Are there more? If you see an ant, there must be an anthill, right? So we need to figure out more about what's going on here, because these prints are supported in resistance lines. And there's also larger prints are stronger than smaller prints. So if we were interested in trading something like Apple, well, we need to do a little more due diligence on that. So there is a function here called Control T for ticker, and we don't have to worry about the mess that's here. Let's put in Apple. And if you leave everything default, it returns everything. And so I'm going to choose run. And what I mean by everything is because the date range on this is from 2018 to 2024. So that, and then we haven't selected anything like a share size, like you could do greater than, less than, equals, or all prints. But if you don't put anything in, it returns absolutely everything that it has. So since we started tracking Apple, there's 2,378 prints since 2019, individual trades since January of 2019 there. Now, the interesting thing here is that this second grouping is a summary of the first grouping. The only difference is that we can say, how many trading days do you want to go back? And what's the share size that you want? Well, Apple has so many prints all the time. Let's say we only want to see things that are greater than 500,000 on the SPY. Okay, now if I can choose run, and it'll just update this section. If you've set this, it stays with the form. So the next time you open it, then it will keep these settings, 90 days and 500K. So think about the amount of work, right? 90 days at an average of, so we get about 500 new prints a day. So in this time frame, from the time that I clicked run, there, it summarized 45,000 possible prints, counted them up that matched the criteria, and dumped it here in this box, right? So this is saving you so much time, because when we go and start adding stuff to our chart, what I wind up doing when I look at this, if this is something that I want to trade, then I'll start putting these lines on my charts with the dates. Okay, so we've got the latest one on Apple that met our criteria of greater than 500,000 was 800,000 at 162.16. Now, you can see this here. See, there's a 700,000 and a 100,000. So that makes your 800,000. Oh, and by the way, that's $130 million. Right? So anybody who doesn't believe in the dark pool, it's like if you knew your neighbor put $130 million into Apple, would you ask him why he did it? And could you get in on it too? Right? I would be doing the same thing. Right? If he was long or short, I don't care. I'm along for the ride. Hence the name Remora, right? If anybody was asking, because Remora is a specific type of fish that cleans mammals like sharks and whales and things like that. They're essential to ocean life, and how they make their living and stay alive is by feeding off the larger animals, literally feeding off of them. That's why it's called Remora, because us as regular traders can't take on the institutions, and you don't want to get on the business end of the institution or the shark by being in front of them. You want to swim with them. And that was the name Remora there. And so I wind up looking at this and picking out the bigger prints. If there's just so many of them and they're all mashed together around the same price, well, you can always adjust your share size. Here, now the thing is, this says 90 days, which means that within this 90 days, if there was another print at 162.16 that wasn't on the same day, right? These just happened to be on the same day. But say like 30 days ago, there was another one at 162.16. It would still say 2 trades and the most recent print. So you have to double check, because if you went back, say 300 days and it said like 4 million, well, you might want to look, because maybe maybe that was something like from last year or whatever. You just have to be careful because this is giving you what you asked for, right? You just have to be wary that the format that it's actually giving it to you. So with these, I'll probably have to let me make a new watch list, and this will be web swings. Okay, so I'll do the Control T, and we'll look at Apple again. And if I'm looking at a stock and I like it, okay, I can choose Add to Watch List here. Okay, so it adds it for me, and then it gets all the current price. If, for example, like in the beginning of the day, you get these columns that aren't the right width, what happens is when you have information that doesn't fit in the width of the area that it has, it looks like little dashes. We can choose manual refresh. So, and it just redoes all of the formatting for what you have there that's available, right? So we can see more information there. If I was interested in these prints, for example, so if I went Apple over 1 million and chose run, here, it's like, let's see, oh, look, 154.83. Now, this is a perfect example of what I call print archaeology, right? When we looked back and said the 10 days, we didn't see this 5.4 million for $850 million sitting here. This is part of your due diligence, because if we look here at the price range here, 154, 153, look, we went down 133. This is a huge splash. We went from 154 all the way to 130, and then all the way back up to 162. I mean, we are in a bear market too, but when we cross this print again at 154.83, the game is on, right? And this is something about looking historically back. What caused this move? Because without institutional money, you don't have moves in stocks, not very much, right? It's really difficult to trade, like boring molasses in January if there's no institutional interest, right? You get interest like this, there's your commitment. I'm bullish above 5.4 million and I'm bearish below. You could be the biggest Apple lover in the world, but when we break below 154 in this, well, look what happened. We came all the way down to 130. If you were biased and absolutely loved Apple, you'd be sitting there throwing your hands up saying, I can't believe it's going down. It's like, well, it went down because of this print, right? They could be bringing it down to buy more, and then that's probably what happened, right? Because we came back up, we broke this print. And here's the thing. If you're watching a stock, you can pretty much always trade it, right? And that'll be part of the homework should you choose to do it, right? Because I'm not going to follow up with you on that. But I'm going to give you something that you can work on that will help your trading in doing this sort of thing. Okay, so we can see the open, the high, low, the close, and the volume, net change, and all of that there. And then we can see this summary. So let me show you something about... Bank of America, right? Was it that? Oh, no, I'll show you two. Silver. Because I showed you silver in the slide deck. So what I've done here, technical analysis wise, somebody said something very intelligent to me. And I hung on to my friend Taz, who teaches in the crypto room. I was always concerned with my technical analysis. Is it right or not? And he said to me, well, it's your trading plan. And I'm like, yeah, I know, but I don't know if my trading plan is right. And he's like, well, I'll give you an example. He said, if you were to draw a trend line from Bitcoin's inception to now, it's bullish. It's like, yeah, well, it was a millionth of a penny at one point. He's like, that's my point. He's like, how are you looking at this? And that gave me a lot more confidence when he actually said that. And so what I'm doing this, and you might not agree with my technical analysis here, but I'm going to show you the print, which makes sense because the prints trump everything. I do this on a weekly chart when I look at this. This is a long-term trend line. Now, I use TradingView because I like it better than my current platform. And this is called a parallel channel, which is actually a double trend line. You draw whichever one you want and then drag it down to your support and resistance, right? You guys might look at this completely different. You might see something different here, but this is a weekly chart. And silver is slow like molasses, like I had mentioned. But I did this, and you can see that the trend, and there's on the bottom, right? Without prints, you could say, yeah, that looks pretty bullish on a weekly. But I want to show you here. I'm going to go back to the daily, and then we can see this here. Okay, these were older prints. I went back and pulled a few other prints back on silver. So back on June 1st, there was 3.2 million here. Okay, and what happened? Well, we hit this, we opened up, came down. This one here, we opened up, we came down, we broke the print, okay, possibly bearish. Then we came up, we came down again, we came up and tested again and didn't hold. That's the splash. And if you can't tell if you're in a splash, you're in it. Okay, there was room to trade this, but nobody does. Its ATR is like 20 cents a day. It's ridiculous. So, but when we break down with this increasing volume, right, on this print, and look how long it took. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. On the 14th day was the confirmation that it was actually bearish. Okay, and then, so look at this, that's 3 weeks. So if you look at a stock once and say, oh, it didn't move, you've missed the trade, right? Because all you have to do is be patient, P-A-Y, patient, right? And so this, we've got the trend, and we come back up and we break this. There's a new print here, another 1.6 million. We move up, back down again, and we fell all the way down to the bottom. Then we got 11.8 million. Now, if this is truly the bottom, which it looks like, I mean, I took a trade here, right? We got that. I saw this. We came back higher high. And then I'm like, okay, well, we get this 11.8 million. I took a lotto, right? I spent 30 cents, buy options out to September or whatever. I got out here and I rolled to closer options because mine were out to September. They were going to take forever to make some money. So I rolled out, and so I've got some longer term 19 calls coming up. So hopefully that does well. But here's the power of the prints, right? If you don't look at anything, how would you know? I mean, technically you might say, oh, well, that's whatever. But this candle here is the thinnest candle I've seen pretty much in my life, the anorexic candle. And this is the decision one because it's got 11.8 million sitting there within a few pennies of each other. You know, that's one institution getting their position in. Okay, and look how many times, it's not that there was 11 million at the buy side. Look how many days it hit that. Even though this is the day that it was placed, the order was placed here or received, hit the time and sales. You got your receipt. You know, you bought your fries at Costco. Here's your receipt, right? But the number of days that we hit that, 1, 2, 3, 4, 5 days. It might have taken 5 or 6 days for them to fill this order. And then we came down, broke the print, and we're off to the races. So I'm telling you this leading up to the homework that we're going to have in using Remora. So the other one that I wanted to show you was Bank of America. So let's look at Bank of America. And here, was it Bank of America? Oh yeah, I was doing other work on this one with a coaching student. But here's an example of prints actually working, right? We're coming back here. This is back in June. And what you wind up doing is find an older print, especially a large one, and put it on your chart and see how it behaves. And as you start finding more prints along the way, you'll see how they become support and resistance, right? And you can see that here with this June 6th one. We got that. There were actually two on that day. And then we come down, there's a new one here, and that's the close. And then we're jumping through and falling all the way down. So Tim's got a question. He says, great stuff. If why or when should you get out of this? Don't see a reason to average out for a while. Yeah, so Tim, that's your trading plan. Okay, so if you're overly bullish, oh yeah, on silver, if we look back at silver, for example, my target on silver, okay, is this print. Well, first is this 50 SMA. 19 is my target. Those are the options I bought were 19. Okay, and then I'm expecting a pullback. On the pullback, we start moving up. My next target's this print, 1940. $20, right? We've got this coast is clear between here for that sort of thing, right? So I don't want to get into the actual mechanics of trading. I've given you a couple examples of how these prints actually work, right? Because the value of the dark pool. And this is my trading plan. Targets the 50, then the next print, then the next print, next moving average. You can, if that's your trading plan, I'm holding out to 2150 by all means, if it gets there, right? That's up to you. But, if the market gives you something, you take it off the table because she'll definitely take it away from you. So AM says, on previous Apple example, how do you know the older 5.5 million at 154.83 is still valid and an active level? Could it not be fully consumed on the way up? Okay, so look at it this way, AM. If you, being a trader, you have an entry point and you have an exit point, right? And you have a stop loss. So institutions do that too. If they're buying at a specific level or selling at a specific level, it's going to move. If we come back to that level and they're still buying or they're still selling, it's going to hold there. If they're completely done with their order, then it's good. Then that print's going to be like it never existed at all. That's how you know when that print is dead, meaning that the institution is done with that trade. Yeah, so hopefully that makes sense with that. So I wanted to show you that with these, right? And I don't want you to give up on prints because there's a level of frustration, and I've been through it too. And I know this is a demo on how to use Remora and things, but I'm taking the extra few minutes to show you the value of the actual prints, right? Because take prints on any stock, right? Ones that you like to trade, and just see. It's an eye-opener, and put them on there. And then you can trade off of them, support and resistance at the same time. Okay, so Brian has a question. When a big move is expected on a massive print, when should we execute a straddle after the print average? Do you want to miss the splash? Brian, I'm really leery of massive prints. And I'll tell you, look at Uber. It's on like week 6 and it hasn't moved, right? It's going to move at some point, but you need in your trading plan, you're bullish above a specific level, bearish below a specific level. Once it makes its direction and it's very clear, one thing that you can be sure about on a massive print, it's going to have a big move. Now, the payoff with that is being patient, right? I remember, what was it, 3 or 4 years ago? Oh, yeah, so they report Tuesday. Yeah, but that's the thing. That print came in weeks and weeks ago, right? So we'll see. We'll see with that. Yeah. So I remember it was about 4 years ago. There was like a 22 or 26 million print on TLT, and Steph traded that. She rolled it like 26 times. Like it went up like, I think it was 17 or 20 points, TLT. And she rode it right to the end, like Thelma and Louise, right off the end. You roll it until it no longer works out, right? So you're good there. So knowing those sorts of things, and the other thing with prints too, with each stock has its own personality. Bank of America, you know, is different than Tesla. Google is different. You need to, when you watch these for a while and get to know the charts, right? If you pick a stock and you put your prints on it and you do the half an hour of work that it takes, you might as well keep an eye on it day to day. Because I know people that when I know people that trade 5 stocks all the time until the prints are dead, right? Because what they'll do is they'll pick their 5, they'll watch it every day for prints. Sometimes there might not be a trade on it, but there's specific trade setups that you can look for. And I know, yeah, I have a very close friend, makes $1,000 a day per stock, you know, just watching those because of the prints and knowing where they are, right? And that's a skill that that Remora helps you find. It gives you the tools to find, and then you need the experience to set that up, right? So the focus on seeing that in action is just so that you're aware of how powerful they are in that. Okay, so this is, so we were back on silver. Yeah, so if we break below this 11 million, or this 11.8 million, like if we come back below and drop down, then we'll go bearish on it. And so yeah, silver's, I've been stopped out of silver before. I don't like it, but this was too enticing. So okay, so let's get back to it. Oh yeah, so we've looked at the Control T for ticker. Now we're planning our day trades and swings. So let's look at this. There are two. Well, this here, if you're looking at the Control T, this gives you your support and resistance lines and pivots and cams, right? That's not terribly helpful the way that it looks like, but I want to show you something else first with this. Okay, let's do Control, Shift, and S. And don't worry about the shortcut, that's on the main page. But this is a quick print lookup. And if we were looking for Apple, like we were talking about, go back 25 days over, let's say 500,000. Now, I'm going to look at prints. There's 2 tabs here, but I'm just going to choose Run. Okay, so there are the prints in the last 25 days, sorted by price, highest to lowest. So right now, we're at 162.12. Okay, and then we're 4 cents below this 162.16. See here on the 29th, on Friday, I think they're going to take some profit. I think next week they're going to pull back a little bit. Even if it's bullish, you know, you've got these massive green candles. Somebody's got to take some profit at some point. But we see this, so I'm expecting, you know, there might be some profit taking here. But anyway, you can see quickly what the prints are. Now, the setup for this is great because if we click on pivots and cams, let me just, I'll untick this first, and we'll just look at the pivots and cams by itself. So if you use Thinkorswim, Thinkorswim will give you all of the pivots and cams, right? But Remora gives you the pivots and cams too. It does something else that's great. If we were planning our day trade and we're at 162.12, it's like, okay, well, 162.13 here is a cam. And what this means then is if we break 162.13, we have a 76-cent move to the next cam, which is 162.89. If we break that, we have a 38-cent to the next cam. Now, these ones, the ones that start with R and S are the John Persons pivots. And then the ones that have H and L are the Camarilla pivot boss. And those are critical. And I'll show you an example of that. I just, because I have my Thinkorswim open here. And here's the SPY for Friday. And the solid lines are the cams, Camarilla pivot boss, and the dotted lines are the person's pivots. So the shaded part's all pre-market. And look what we did. We opened, tested the cam, open, closed the next cam, R1, hovered around R1 up to the cam, down back to R1, back to a cam, up to R1. Once we got some volume and broke above this, and look at the time during the day, it's slower, up to the cam. And then we didn't break that cam until almost 3 p.m. And then I think we closed around, 4:11 we closed around. And look, all the way, we broke just our heads above R2 and sunk into the swamp. Right there. We closed at whatever that was, 4:11, something like that. But you see that every day. You know, if your stock is going to blow through these just like without even looking, then that means it's super strong. And when you have prints and something blows through a pivot moving average like that, that's really strong. Be on high alert for that. So the other thing that I wanted to show you here with this is I'm going to choose include prints, right? Because we met our criteria, and I'm going to choose run. So what this does now is if we're at 162.12, okay, like we were looking at, oh, well, look, there's this cam. Well, we have the pivot. We have a cam at 162.13. And then we have a print at 162.16, right? And we saw that there. So these are the same as drawing that line on your chart. Now, the interesting thing here is if you want to set a trade setup, right? So Apple, you might want to give it at least 50 cents or maybe even $1. So what I could do is you could put in a pocket size of $1. So what that means is where in all of the support and resistance today can I get $1? Well, if we're at 162, our entry, if we break below this cam here, 164.78, we have a trade, $1.20 to 166. That might be a great trade there. And the reverse is true. So this, if we're reading it on the bullish side, we go right and then up. If we're reading it on the bearish side, you're taking the step ladder down. So 166.01 is $1.23 to the next cam, just like you saw in the chart that I showed you. Now, the other thing that you can do with something like this is towards the end of the day, and I love doing this for swing trades. It's phenomenal. And no application, well, Thinkorswim might give you this. It's you've got to configure it a specific way. But if I switch this to next day, and I choose run, then if this was the close, so this, say this, all of this information is for today. Well, the way that pivots and cams are calculated, it's a combination of the high, the low, and the close for the day. But if we estimate the pivot calculation for the next day, it's the high, the low, and the current price, because your current price at some point will become the close because you run out of time for the day. So it just switches from current price to closing price. So if we can get as close to the closing price, then we can see that the next day we can see our support and resistance lines. So for example, if I could estimate that R3 on Monday is 170. Okay, so now Friday 355 is rolling around, and Apple's around 162. Well, R3 is nuts, right? So you could take a trade, for example, maybe sell a call at 171, a call spread, or knowing that it's, or a high probability that it's not going to break R3, right? Because R3 is technically oversold. And that would be up to you. I would hesitate doing that just because of how bullish everything is. But on the other hand, too, you could say, okay, well, if we're super bullish, or super bullish, well, there's R2 is 165, and there's the pivot 161. You might take a swing and sell it where you get a credit from selling a put, right? So you know where these are. And the other thing too is if you're calculating a swing, say for example you're bullish on a stock, and it's like, well, I'm thinking of swinging it into tomorrow, like silver or whatever it was. You can look here and see where your oversold level is. Where's your R2? Where's your R3? Right? Because if your R3 is like 50 cents away, you might want to reconsider that. But these are great trades Thursdays going into Fridays, because like on a stock like Apple that only has weekly options or something like that, you know, Thursday afternoons are great for looking for these sorts of trades. So the other thing that we do here is if we're trading this like this, and you can adjust your pocket size. Maybe I wanted 75 cents. You can do that, and it adjusts it for you. So what I wind up doing, let me open a new Word document. And I'm going to choose copy here. And what this allows you to do is I'm going to dump that into Word. We'll do no spacing, right? So I print this out. I'm like 99% of the stuff that I trade is the SPY. So I print this out for the SPY every day, and I'm looking for 50 to 75 cent pockets to trade. And I do that with options because it's so expensive. And so, yeah, so now I know all of these things. If there's something specific that you want to add in there, you can. If you see something interesting on the level 2, or you want to add in your moving averages from the daily or the weekly, you can do all of that here. Now you have your trading plan, and you can say, for example, if whatever the price of Apple is, if we break, if this is S2 or whatever, if we come down and bounce off S2, like say we come down and test 158, we come down 157.75, my trading plan is I can trade it up to the cam, or if we break the 158.30, my target's 160, right? And see how easy that is, right? Now you can write this down. If Apple breaks 158.50, I will do this, and I will take profit at 160, and then I will take profit at 160. Well, if you'd hang on to a bit, 161. This is 161.37, and then you scale out whatever your trading plan is. But you can use this. It's very simple to use this. At the end of the day, it's like, oh, am I swinging something? and for your trade setups. So that's really important for me. And I can't, to me, this is worth the price of admission. I know I wrote the software and I shouldn't, it's not fair for me to say it, but I added this because of that. That's how I trade, is I need to see all of this information. I can glance down at the sheet and I can have a trading plan within about 30 seconds, depending on what the stock is doing. Right? Because if we opened up and gapped down to 160, okay, we're at 160. Oh, look, there's a cam, right? If you're using Thinkorswim or something else that has it, you can see that. But if you can do all of this pre-market, know when you're getting in and know when you're getting out, you're miles ahead for that sort of thing. So the other thing that I wanted to mention is on this Control T. So like Apple, right? When it showed us these pivots, right? Because that wasn't helpful to seeing all the numbers. But because it's blue, if you double click it, it gives this to you. It's already done for you, right? And then you can just change it. So let's go ahead and look at a couple other things. I want to show you two other things, I think. One is the ticker chart. Now, the ticker chart, we're looking at different prints, right? Like, this is just a visual sort of thing. So we were looking at the Control T, the recent prints, things like that. This says hit Control Y for options. And this is AMC. Let's put the SPY on here. And then we'll do all prints. And I'm just going to choose run. Oh, and this is going back 4 months, right? 120 days. That's a little excessive. It's not very good. I'm going to put this down just for the purpose of the demonstration. I'm going to turn this down a bit. Okay, so look at this. Are we bullish on the SPY? Well, we got this 5 million at 406.16, right? And then on the 28th, but see, remember when we were talking before that green dots were bullish and red dots were bearish, and you can see them massaging the price and then the volume. So we see all of these red dots, sell, 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 sell. We see some green dots here. It could be covering, right? They could have shorted here and been covering, but then we see this, and then we see buy, 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 pull back, massage the position a bit, gap it up the next day, manipulate the price here, and then all of a sudden we come back to 390. Remember that level we talked about, 390, right? 390 was important over here. It was important here, and it was important here. We came back, tested the 390, and look at that. From 390 to 412 almost, right? That's a 22-point move. I wish I had bought calls at 390, right? Could you imagine buying the 415 calls out 3 weeks for like 50 cents or $1? Because when I looked the other day, they were worth like 15 bucks, $1,500 a contract, right? That's hindsight. But being able to see this level of detail here, and if you like it, investigate it further, right? Because that's what this stuff on the left-hand side is for. We have the date, the print level, the close for the day, the number of shares, and the number of trades. Notice how important these are. The Levi trades, these are the late ones, reported late, 12 trades, 12 trades, 8 trades. These are moving the market. These smaller ones are massaging their position throughout the day, right? When we get a 500,000 or whatever, they're just pushing it around, right? Because pivots and moving averages and all of that, they buy and sell. They know that, right? If you need to push it up to a pivot somewhere so they can take some profit and push it down, yeah, I think that's what a lot of these prints are. You're driving the car around the cones, essentially, because you're the one spending billions of dollars. We're not trying to beat them because we can't. But if we can see what they're doing, then that's great. So the other thing with this ticker chart is you can put any ticker that we have prints in there for. If we have different watch lists, then we can select that here. Now, the purpose of this is because you can put any ticker in and do it manually. But if we, because this insight, so let's do, well, GDX, it's not a very good one. XLF, if we double click it, see, it instantly runs it for you. So you don't have to do anything. So if you have a watch list made, you can do that. And then the recent prints, as long as if you have your recent prints updated, then it's the list of all of the results that meet your criteria. And you can just double click them too, right? And it'll populate everything here. I think it's working. Okay, so there's Apple. And you can see that there. So this is pretty key too. I'm a visual person too, so I find this quite helpful when it comes to that. Okay, so one other thing, and then we've got to wrap up in the next 15 to 20 minutes. Oh, so David W. has a question. He says, how does it work if you use it before the open? So the way that the pivots are calculated, it's the high, the low, and the close of the previous day. So we always have the previous market's data. So that can always be done, right? If the market's not open, it doesn't matter because it's the last trading price that's included in that calculation. So that's, hopefully that answers your question there. Yeah, so we always know, and it's good to know before that. Okay, great. So the other way to look at prints here is we have print pivots. And this has gained some popularity recently. This was the original, Remora never used to be called Remora. It was kind of a, I don't know, we just called it the project. And when we started writing this 4 years ago, this is all we had, is we had the dark pool tabs and this pivots tab. And so what you can do here is, this is on May, so this is a little slicer. So if I go and click on July for the month, okay, then what it does is it takes all of the tickers and summarizes all of the prints for the month. We can switch this to days and then choose whatever days you want. So for example, if I went to July 29th and clicked there, right, then what we see is a list of all of the prints. Now, we can expand and collapse these, and I'll show you an example. And just for neatness sake, just collapsing. But what you can do is when you get your prints updated, you can come here and select the current trading day. And then when you scroll down, you can say, wait a minute, Amazon had 3.5 million shares over 24 trades. What sort of sorcery is that, right? So you click the expand, and we see here, there's the 24 trades. Now, the neat thing about this is there's the highest price and the lowest price. And then here's the summary of prints, right? And then the value of the trade. So we can see here that, yeah, between 134.84 and 137.45 is 3.5 million. And Steph and I have talked quite a bit about this, because how many trades would you have missed? Because it's like, it's not 3.5 million at one price. It's lots of little ones that make it up, right? And this is a perfect example. I mean, Amazon, well, for all of that to be in a 3-point move, right? In a $3 move, all of that. So we could investigate further with the control T and looking at your chart and see what's happening there. So that was actually a really great example. Comcast, we know, pooped the bed on earnings, but they had this. So with it all collapsed, it doesn't matter, right? You can just look and see if there's something that you like, and then you can expand it, right? Intel didn't do well on earnings, 7 million on the Qs and 6 million on the SPY. So when we look at these, okay, there's the Qs And oh yeah, each of these little things you can click the plus and see when the times are for those. Now look at, here's the thing. Here were the ones for the Qs, and 309.82. Notice, see how I mentioned that these late ones have really weird share sizes. And so they're not tied to options, right? Because options are divided by 100. That doesn't work. So these are just weird share sizes, and we know that they these are signatures like 410, 411, 412, or half of that, right? 205 is half. We call that a half Levi. That's a full Levi on the Qs. So one, they have signature share sizes. They're easy to pick out. And then we know that we never traded there today. And so that's the second clue for those. So you can expand and collapse these with the plus and the minus, and you can add filters if you wanted. If you wanted like just things that are over a specific amount, you can do that. Now, the next thing you can do, if we have selected something, we can do the date and choose clear. Now, what this does is, because we switch to the date on this one, as soon as you click on one and you choose over, well, what it does is it gives you all of the prints broken down by price, highest to lowest, and totals them for every day. So we see this is the one we just discussed for the 29th. Okay, on the 28th, there was 2.5 million, highest to lowest. So you can, oh, there's a nice 2 million, right? So there's different ways of looking at this. The other one is the weekly pivot. I like this one because I'm a visual person. So if I was interested in prints for this week, so let's click this week. Okay, so now it's all of the tickers with prints for this week. I can filter them and say I want over 400,000. Okay, so now I can see all of this. Ooh, AAL 1.2 million on Wednesday, right? That might be a setup. So remember, these prints, if you get one, even if it's 5 or 6 days later, you may not be late at all. You might be just in time to catch it. But you can see these sorts of ones that are here. So the cool thing about looking at it this way, look at Citibank, right? Millions every day. If I expand Citibank, Monday, 1 million at the top. Tuesday, 900,000 just below. Wednesday, what is it? The 3 million, 51.62 to 65. So the interesting thing here is all of these prints together ranged 51.35 to 75. So 40 cents. There was 3 million and change in 40 cents, right? And you can see how that works. So you can adjust this for whatever you like, for months, last week, last month, something like that. Okay. The other thing, okay, I've got 10 minutes to wrap up. I want to show you this. Volatility. I worked with my friend Andrew on this. He is a math nerd, and we were discussing the IV and the price, like implied volatility. So when we had the market crash in 2020, the VIX, the price of the VIX was in the 70s. And try and buy an option, right? The spreads were ridiculous. You could buy stuff $100 out of the money, for the same week and still make money because the IV, the volatility was so high. So this uses this thinkorswim data. The current SPY price is 411. The VIX current price is 21, and the expected move on the VIX is $1.41. So the move for next week, they're only expecting the VIX to move plus or minus $1, right? And just so we're on the same page, you can't trade the VIX. It's a fear indicator, right? It doesn't have volume, things like that. So, but this determines volatility. So I've used this in pricing the possible range of the SPY for following time frames. So what it's saying is Monday, based on the current fear index, the SPY might have a range of $9.19. The low could be 406 and the high could be 416, right? So if you're planning trades, it's good to know that sort of thing just based on market sentiment. And this chart, what that does, this is my nerdy chart, right? Because of the, what do you call this, standard deviation here. So and the further you get out, the higher the range. So I've worked it out that you have the day, the week, 2 weeks. So in a week, we can have a 24-point move. In a quarter, you can have an 87-point move. So within 3 months, we could go from 370 to 458. And that seems reasonable, right? Because we hit 370 just a while ago, and we just broke 411. So that is very possible to hit that in 3 months. If you're planning long-term options, it might be better. The other thing, too, is you can say the VIX current price. So look at this. 919 is the range. Okay, but let's say the VIX went to 60. Then the possible range of the SPY is 25 points in a day. So remember that when you're buying options and you have high IV, this will kill you because whoever's selling you the option is aware of the IV, well, the option chain is aware of the IV, and they are ridiculously priced, which means that it's almost 3 times the price of the option, right? Because we were at 9, right? And options are relatively cheap, but you put it at 25, it's like, geez, we'll reset to live. So I use this in the planning sort of stage of things. Okay, so we've looked at that, the volatility. Oh, a couple other things. I'm pretty much done. I'm going to wrap up. A little quick tool, Control-Shift-R for return on investment calculator. You can put in a stock price if you want, but if you buy something for 30 cents and sell it for 55 cents, and you have, 20 contracts, it's $500 profit. ROI is 83%. When I'm trading, I'm not necessarily watching my P&L. I'm watching the chart, and then so for my own sake, when I get out of the trade, I exit it, and then I want to see what my P&L was, right? So I use that quite often to do that sort of thing. And so, so Brian, you have a question for Steph. I don't know if she's paying attention, but you said, do you have the swings today or do we wait for Monday? She's doing her insights tomorrow. They'll be out tomorrow afternoon sometime. So yeah, because I'm chatting with her. We've got a meeting tomorrow. Yeah, so they'll be out later tomorrow afternoon. Yeah. Okay, so I probably forgot something, but what I wanted to do is I will show you this, and I'll post it in the alert tab. So homework. So William, the question is, when will the recorded version be emailed to us? And Matthew just answered, sometime today. Yeah. Okay, so here's homework, and it's only friendly suggestion. I'm not following up with you. I behoove you to do it for the sake of your own trading. But you can tell I'm a German Shepherd fan. I've got one of my own. I'm asking you to find 2 stocks that you would like to trade and add prints 3 to 4 months back on your chart. And what I do is I use something called a, it's not a, I thought I lost it. It's the tool that lets you add a line at a starting point, not just a straight line across. And so you can see when the print actually came in and put that on your chart, like I showed you, right? Find 2 stocks that you'd like to trade and add prints 3-4 months back to your chart. See if you can find when the original move started from the prints. So that helps you identify the splash, right? And see how the stock behaves, because everything behaves differently. Now, is the stock above or below the prints currently? At what price level? Now, here's the thing. At what price level would you go long or short? And what would your target be? And what is your stop loss? You need to write this down. Watch the stock every day to get to know its behavior. And then finally, oops, we just created a trading plan, right? And we've got the emotion out of it. If it crosses here, I will do this with this target, and this is my risk. If it goes below this level, I will do this. This is my target. This is my risk. Done. Painless. So I'm going to put the homework in the chat, should you choose to do it. Tim, all of the old prints are in Remora here. Yeah, that's the thing. We have prints going back to 2019. And Randall, swing trades are given during the week if you, okay, so there's a subscription service that is, the subscription service is called the Dark Pool Insights, and Stephanie spends about 10 to 12 hours every Saturday going through about 300 tickers, and she draws charts for you and everything like that, gives you all of the targets, bullish above, bearish below, and all of the targets for the week for the swings, right? So that's really helpful. And but the other thing, if you're going to do your own homework for this, Remora does have that sort of, it does have the tools to go back 3 years. It has all of the data on the indices back till February of 2018. So the interesting thing is, hey, how did the indices behave during the 2020 correction? How did it behave during other corrections, right? And you can see the institutional involvement there, and you can see how that actually works. Okay, so I will post that thing, the homework, if you guys wanted to copy it out of the alert tab. And then if you want to stay connected, you can subscribe if you're interested in Remora Lite. There's the link. It's the darkpools.com. There's a tab called Services in Remora Lite. You can contact me directly at support@remoralite.com or on Twitter, Remora Lite. I do one-on-one coaching both for trading and for the application. So that's under the darkpools.com as well, under store, Dave's catalog. And then the website, that's my website for, well, with Stephanie, is remoralite.com. So I'll go ahead and post this in the alert tab. Okay, so if you want to copy that. And so, yeah, I want to thank you all for joining me. I've got 2 minutes left. Oh, thanks, Tim. I really appreciate the sentiment there. Yeah, it's been a long haul. 4 years writing Remora so far, and we're adding more features. Okay, thank you, Matthew. So, thank you, Kenneth. If there isn't anything else, I will drop off. Thanks, Mark. And have a great rest of your Saturday afternoon, everyone. Take care.